Hey, what's up, power traders? Welcome back to the Year Millionaire Podcast. And I'm continuing on into the fourth and final podcast of the 4-week series that we've been in, talking about advanced options. Now, I just got back from the Disney cruise, and I was talking to a gentleman on the cruise who was talking about, he's in this age or years where he needs to really start to focus on his retirement, growing his investments accounts, and really setting himself up to maybe come out of working in the next 10 years or less, and also leave a legacy for his family and kind of accomplish some other financial things that he wants to accomplish. And we got to talking in the hot tub, and we were talking about options and different option strategies, and it really gave me the idea for this fourth and final episode about advanced options. And that is the fact that you can use advanced options in retirement accounts. And a lot of people don't know that they can do this. And so it's also something that is misunderstood, because when you think about a retirement account, the first thing you think about is typically your employer. 9 times out of 10 are with Fidelity or something like that. And they give you these 5 different accounts that you can pick from, and they kind of pick your investments for you. You usually don't know what's in them. They'd say something like 10% bonds, 20% stock, 30% dividend stocks, another 10% growth stocks, etc., 5% real estate. And they just tell you big picture what it is. Most people don't know that those retirement accounts don't have access to special stocks. They're going out into the market and they're picking what stocks should be in those baskets or allocation, and they're allocating that correct amount of percentage to those stocks that are in that basket and forming that portfolio for you, if you will, and kind of serving it to you and say, hey, here's the 5 that you have to pick from. What most people don't know is that you can do what's called a self-directed IRA, which means you have the ability to pick the investments in your retirement account. Or a different way to look at it is you can use the money in your retirement account for any retirement investments that you see fit. So it's not just the stock market. It means you could take that money and you could buy real estate with it, as long as your retirement account owns the real estate, purchases it from that account. There's some other rules where you can't do the work on it yourself. You have to hire it out, but that's not the point. The big picture is that you can self-direct or tell the money where it should go for the investments that you want to pick. Most people don't do that because they don't know how to pick good investments, or they haven't been taught how to pick good investments. And so there's this fear that, like, oh, if I pick my own investments, I'm going to mess it up. I don't know what I'm doing. But a lot of the times when you look at the investments that they serve you on a platter, they usually perform subpar, either at the same pace of the S&P 500 and sometimes below the S&P 500, which really leads me to, it's not that hard to pick your own investments. Sometimes just putting your money into the S&P 500 is the best investment versus picking all these complicated investment vehicles when it comes to retirement. But here's the kicker, and where advanced options comes into play, because in that self-directed account, now let's say I've talked to people. In fact, this gentleman said he owned 100 shares of certain stocks, and most people don't know that now you can, number one, pick what stocks you want to own. So if it's Amazon, Facebook, Nvidia, AMD, Microsoft, you can pick those versus being told, oh, you can only have 20% of those and 80% has to be divided up between bonds, insurance, real estate, stocks, etc. You can pick the higher growth stocks. What makes it so sweet is because it's self-directed. After you pick the stocks that you want, if you have at least 100 shares, this is where you can start to do, well, you don't have to have 100 shares, but let me talk to you about the first advanced option strategy that you can try inside a retirement account, which is selling covered calls. And so if you have 100 shares of a stock, Let's say you have a stock that's trading at $100. You can sell a 110 or a 115 call option and get paid money up front. And if the stock doesn't hit 115, you get to keep that premium. So it's a way to give yourself an extra kicker inside your retirement account. And then if the stock goes up above 115, you'd get paid the difference between 100 and 115 because the stock will get called away from you, but you still get to keep that extra kicker. So let's say that extra kicker was $3. So you just turn your investment from making $15 to making 18. But if it doesn't go up to that point, you still get to keep that extra $3. And so if you could keep an extra $3 on top of every 100 shares you own. Now, for mathematical purposes, if you're like, well, what am I going to do with extra $3? Every 100 shares you own, $3 is actually $300 a month in this example that you would be able to keep. So just imagine if you can increase your growth per 100 shares by $300 a month or $3,600 a year. And now you multiply that out by how many other shares or lots of 100 shares that you have. So let's say you got 10 other stocks that you got 100 shares on. I mean, you could be doing $3,000 to $5,000 extra dollars a month, an extra potentially $60,000 a year. And I'm just using numbers that I'm making up here, but I kind of know the market in certain stocks and roughly what you can get, but it just depends on what stocks you own. But most people don't know that they can do that advanced option strategy and sell or rent their stocks out inside of their individual retirement account and get a little bit of an extra kicker. And the cool thing about a retirement account is if those stocks get called out from you, they're still in your retirement account. So it's not like you withdrew the money or anything like that. So there's no early withdrawal, no penalty, because the money still sits in your account and then you can buy the same stock, which leads me to my second advanced option strategy that you can do in a retirement account, which is you can sell covered puts because you have the money to buy the stock. You can sell covered puts and do what I like to say, get the stock for a discount or get paid for trying, which is another sweet strategy to do in a retirement account. Instead of just buying the stock straight out, you could get paid to buy the stock. And then there's some nuances to it where you can sell what's called a deep in the money option. You can actually get paid the time portion of waiting to buy the stock, but still take advantage if the stock goes up in price as if you already owned it. It's just a super sweet strategy to do inside a retirement account. Super safe, especially if you're doing it on stocks like Amazon, Microsoft. It's like, you can't lose all your money because Amazon or Microsoft would have to go out of business. And then the way that we teach the strategy, they would have to go out of business in the next 30 days, which is super unlikely to happen. And so it just really takes a lot of the risk off the table because most people hear that options are risky. And typically they're hearing that it's risky from, sometimes their financial advisor, the bank, the people who either A, don't know how it works, or B, don't want you doing it for yourself. Because the reality is, if you start doing it for yourself, then you don't need them. If you don't need them, you don't pay the fees. You don't pay the fees. How are they supposed to make money? They make money a lot of times by keeping you in the dark and doing what you either don't want to do, don't know how to do, or what they scare you into believing you can't do for yourself. Not all financial advisors. There's some people who just don't have the time to do it, who also just don't want to learn it, would rather just outsource it. Obviously, there's a time and a place for financial advisors, for banks, different things like that, for mutual funds, for retirement accounts that are managed by a fund manager. So it does have its place. I want to be very clear that I'm not saying that there's no use for that, but I'm talking to the people who are like, I'm trying to make better than average. I am trying to take control of my finances and get the additional kicker, the additional premium, and maybe make up for some lost time or hit some ambitious goals that you have in retirement versus looking at retirement like, I'll never make any more money than this, and everything from here is just downhill because my finances are fixed. Those are the people that I'm talking to who want a little bit more out of retirement and also want a little bit more control while they still have some time left before retirement. The other thing you could do is sell in bear markets. So when the market is going down, you can sell deep in the money covered puts, which means you can make money from stocks falling. And then by the time they force you to buy the stock, you already got paid a hefty amount up front, as well as the stocks sell off, you kind of stabilize how much you would buy it for. So that's a really cool strategy when the market is declining. What most people do in their retirement accounts when the market is going down, they typically just like, I don't want to look at my account, or their financial person is like, just don't worry about it. You're in it for the long term, which is partially true. But a lot of times when the market dips like it did during the pandemic, did it come back roaring? Sure. But as it dipped and sold off as the world went into shutdown, what if not only obviously you waited it out and it came back, but what if you could have made money during that dip and then made even more during the comeback, almost like double dipping it? What if you could have jumped or leapfrogged your retirement account 2, 3, 4 years into the future by understanding some of these strategies, like selling covered calls, like selling covered puts, like selling deep in the money covered puts during bear markets? These are the things that take your account from okay to good, or from good to great. This was to take your retirement from, ah, I'm going to have to downsize my house or not live in this neighborhood anymore or change my lifestyle, to like, no, I'm going to keep my lifestyle and I'm going to travel and I'm going to be able to help people even though I'm in retirement and I don't work anymore, because you know how to get a little bit extra juice squeezed out of the stock market. The other thing that you can do from an advanced option strategy is you can do direction neutral strategies like iron condors on cash settled ETF and indexes. So typically in your retirement account, they won't let you do anything where you might need margin. So you typically can't go naked or anything where you'd have to borrow money, because they don't loan you money to buy stocks or cover your trades or your investments inside of a retirement account. But you could do non-directional neutral strategies that are cash settled on indexes and ETFs, on cash settled indexes and ETFs, which again puts you in a position where you're not trying to pick if the market is going up or going down. As long as it stays within a range, you can make some money, as well as at the end of the day, because it's what's called cash settled, it'll settle with the cash that you have in your account. You won't have to add any money. You won't have to borrow any money. It's just whatever the closing price is, they settle it. They don't actually make you buy shares and then you have to turn around and sell them to get your money. They're called cash settled ETF, cash settled indexes, but you can do direction neutral strategies, again, like iron condors on those inside of a retirement account. And so the whole point is, the more you know about options, the less you will fear options. The more you learn how to use options in an advanced way, the more choices you will have in retirement, the more choices you will have from investment vehicles, the more choices you will have, or opportunities to make money, regardless if the market is going up, down, or sideways. And that is the power of advanced options. And it's even more powerful when you can use them inside of a retirement account versus feeling like the only strategy you have is buy low, sell high. And if the market goes lower, just buy even more and bring your cost basis down and hope that everything turns around and starts to go higher. I mean, that's a very limited strategy. Basically, everything has to keep going up. And that's not always the case. And some of you may have lived through and experienced that. But with advanced options, you have those moves and those counter moves, even for your retirement account. So advanced options is not just for day traders, swing traders, technical traders, but it's even for you those of you who are out there thinking, how can I squeeze a little bit more juice out of my retirement account? How can I turn this over and get a little bit better return as I start to get closer to that 59 and a half or whatever age it is that you plan on retiring? So if you're not familiar with advanced options, depending on when you're listening to this, we're going to be doing a 4-week advanced options workshop, which is going to be coupled with the advanced options course. I'd love to see you in there. If you have no idea what advanced options are or how to get started with them, just check the description for a link to communicate with me or my team, where you can send us an email at info@thebrownreport.com. And we'd love to share with you how you can make advanced options work for you, your retirement account, and your family. I'm signing off saying, remember, you never go broke taking a profit, and I'll see you on the next episode.